Hi, this is Tammy. I want to welcome everybody back to the Max Tax Training Intermediate Tax course. This week we are on lesson 1B. And I just want to remind everybody that while this is a self-paced study course, we do encourage you to stay on pace because trying to cram 8 weeks worth of coursework into a weekend or two is not fun. So before we get started, I just want to remind everybody that if you are not already on our mailing list to receive this training delivered directly to your inbox along with the coursework material, please be sure to go to maxtaxrefundguarantee.com/jobs so you can have this training delivered directly to your mailbox along with all the supplemental coursework. So let's go ahead and get started. As you recall from last week's lesson, we covered what's new this year, course intro, and screening and interviewing. This week we'll be going over filing basics and filing status. And then of course I'll provide you your homework at the end of this lesson plan. In the what's new this year, you learned the highlighted tax changes for the 2010 tax year. Remember how we stressed that each tax year has its own set of tax forms and publications that must be followed. So while you're not going to be responsible for knowing what the tax laws were in 1985, you will be responsible for knowing the tax law overview of the past 2 tax years. So for example, in 2011, when you're preparing taxes, you will be responsible for knowing the tax laws in 2010, which is what you'll be preparing, but also the tax laws in 2009, which is what you'll be doing second looks for customers on. And these can always be found in the beginning of the form instructions or publications, the highlighted changes, so that way you don't have to flip back and forth between the books. The course intro should have been a real quick one to get through because that just basically focused on some tips and techniques on navigation and what to expect in the following weeks. Remember, we only have 4 weeks to get through the course material because we're going to spend 2 weeks on actually preparing tax returns by hand, and then we're going to spend another week preparing it with the software, and then the last week getting ready for the test. So this is an 8-week course. We have a lot to cover, so you definitely want to know how to get through the material efficiently. The screening and interviewing module is probably the most overlooked, but it's the most important. Because here at MaxTax, we believe that tax preparation is more about helping people and solving problems than crunching numbers. So this lesson focused on people skills to give you some tips and techniques to help you communicate with all different types of people and background. Because if you don't ask the right questions, you can't get the right answers. And if you don't get the right answers, then you cannot prepare an accurate return. So this is one module that we will go over and over and over once you're in the field, once you're on the job, because it's very important that you're able to ask the right questions to the client, because that's what they pay us for, to be able to ask the right questions, to get the right answers, to get them the maximum tax refund guaranteed. In the filing basic lesson plan, you'll learn that individual tax preparers are required to file a Form 1040. And you'll also learn that the IRS has 3 different versions: the 1040EZ, 1040A, and 1040, with the 1040EZ being the most basic of the 3. The IRS says you can use whichever form you want, and they actually encourage you to use the most basic one for your tax situation. Now, I will give you a little bit word of a caution, because let's say you pick the 1040EZ, the most basic form, and there's not a particular line item for, let's say, your stock sale that you had this year. Now, that doesn't mean that you don't list that stock sale as income. It just means you picked a basic form and you need to go to the next one that does allow you to include it. Now, as a paid tax preparer, this conversation isn't even applicable to you because the tax software you use will always start you with the 1040, and when information is transmitted electronically, it'll always go over as a 1040. So as a paid tax preparer, this isn't important which form you use because you'll always use the 1040. And you also learned who is required to file and who should file. If you're required to file and you don't file, don't be surprised if the IRS sends you a nice little letter saying, hey, we filed on your behalf. And because they don't know your full tax situations, they're going to miss a lot of tax credits and deductions, which may leave you with a big tax bill. So if you're required to file, you don't want that to happen. You'll also learn who should file, because even if you aren't required to file, you should still file if you're due a tax refund. And it's very important that you get this in as soon as possible, because you only have 3 years from the due date to claim your refund before it goes back to the general pot and Congress gets to do whatever they want for that money because it's no longer yours. Unfair, I know. The next lesson for this week's homework is for you to read the filing status module. Now, the filing status is probably the most important thing on the tax return, because if you get this wrong, the whole tax return is wrong. Because it's the filing status that not only determines your tax rate, but it also determines certain income limits for credits and deductions, which we'll learn about in a couple of weeks. So we're going to spend the remaining time of this video going through the filing status, because I want to make sure that you really understand this and hit it home. Because if you do something as simple as check the wrong box, and now the client has to pay more money than they really should have had to pay, well, that's not our maximum tax refund. And if you check the wrong box and now the client gets a bigger refund than they really deserve, well, if the IRS doesn't catch it today, I can guarantee you in 18 to 24 months, the client will get a nasty little letter saying from the IRS saying, not only are we taking back our refund, but we're going to charge you penalties and interest on top of that. So we want to make sure that you really understand the filing status. So let's go over this more in detail. So let's go ahead and get started. Now, there are 5 filing statuses, which are single, married filing joint, married filing separate, head of household, and qualifying widower. And over the remaining part of this video, I'm going to give you the quick and dirty definition of each. But what I do want to caution you is that I only have 10 minutes to cover something that can easily take 2 hours. So you do want to be sure to go over your lesson plan very carefully to make sure you understand each one of these. Now, the important thing that I want to point out on this slide is that although you can only use one of the filing statuses, it's not uncommon for a taxpayer to qualify for 2 or 3 of the filing statuses. So it's important as you're going through the lesson that not only do you learn the definitions of and regulations of each so you can determine which one that the taxpayer legally qualifies for, but it's also important that you learn that you're going to want to be able to choose the one that results in the lowest tax, which usually means the bigger refund. So let's start to go over each of the 5 filing statuses. Now, in order to determine a client's filing status, you must first determine their marital status. So it always starts with the question, are you married or unmarried? An unmarried taxpayer will always qualify for the single filing status, and a married taxpayer will always qualify for the married filing joint filing status. Now, they may qualify for others, but these are always the 2 basic filing statuses that you always have to choose between: single and married filing joint. So let's go over the highlighted points for the single filing status. In order for the IRS to qualify you for the single filing status, on December 31st, you must have either never been married, you were legally separated or divorced under a court decree, or your spouse died before January 1 of that tax year and you did not remarry. Now, the important thing to note about this filing status is that if you are married, you will never qualify for the single filing status. I don't care if you lived apart and never talked to your spouse for 5 years, 10 years, 20 years, whatever. Unless you were legally separated or divorced by December 31st of that year, or your spouse didn't die before January 1st of that year, you can do it that way too. Either get divorced or wait them out. You will never qualify for the single filing status. So it's very important that you understand those definitions and you be sure to read more about it in this week's lesson. The next filing status we're going to talk about is married filing joint. Again, the only thing you need to be able to qualify for this filing status is to be married and to both agree to file the return. I don't care if you never talk to each other the whole year. As long as you can get together on April 15th and sign a return together, then you qualify for this filing status. A couple of highlighted points that I do want to hit for this filing status is that the IRS does recognize common law marriage. And as your job as a tax preparer, it is not your job as a tax preparer to determine if a client is married under common law, because contrary to popular belief, 7 years doesn't automatically qualify you. So what we do is we tell clients to seek legal counsel. Taxpayers who live apart do qualify for the married filing joint filing status as long as they're not separated, and we've gone over that in detail. And if a taxpayer's spouse dies during the year, then they did not remarry, then they do qualify to file a joint return with that deceased spouse. Other points we want to go over is, as we talked about, both taxpayers must sign the return. Now, there are some special rules that you'll cover in your reading this week. And that if both people sign the return, then that means they are both legally responsible for everything in that return and for the taxes owed. So that is one of the reasons why some taxpayers use the married filing separate. Again, this is married filing separate, not single. Filing tax status because they do not want to be legally responsible for the taxes owed of their spouse. And the last point of interest is that the married filing joint filing status is the lowest tax rate of all 5 of the filing statuses. So this is definitely the most advantaged one, and that's why we recommend clients who are married to use this one, because it does have the lowest tax bracket, which usually means the bigger tax refund. The next slide, we have some quiz questions which are included in your email. Be sure to answer those questions before the next video so we can cover them to make sure you can check your comprehension on if you know the difference between single and married filing joint. The next filing status is married filing separate. Again, this is married filing separate, not married filing single. It basically means the opposite of married filing joint. It means that the two spouses do not want to sign a return together because they do not want to be legally liable for the tax liability of the other person. And that is completely fine with the IRS. But what we do like to advise clients is that this is the highest tax rate of all 5 filing statuses. So we do want to sit down and talk to the client and get the reason for wanting to file separate. Because if the reason is that one spouse owes back taxes, back child support, whatever, and the other spouse does not want their tax refund held, then what we recommend in that situation is that they file married filing joint, and then we'll append an injured spouse form, which basically makes sure they get their tax refund and don't have it withheld. But if they insist on not filing together, again, that is perfectly fine. And so what you would simply do is prepare 2 separate returns, including their individual income and deductions on each of the returns. Unless they live in a community property state, which basically means what's mine is yours, and we'll have to follow that state's laws to how to split the income and deductions. The 4th filing status is the head of household filing status. Now, I will take a little moment here to say this is probably the most red flagged filing status of all 5 because it is the most fraud for this filing status, because there are a lot of qualifications in order to qualify for, and a lot of taxpayers and even some tax professionals, very few hopefully, try and either ignore the qualifications altogether or push the envelope on. But do not do that because you are being watched. So if a taxpayer qualifies for it, great, choose it. If they don't, choose one of the other ones that we talked about. So I'm going to hit the highlighted points of what are the qualifications, and I don't have detail or time to go over it in detail now, but you will read about it in your lesson plan. So in order to qualify for it, you must be unmarried or considered unmarried on December 31st, and you must provide more than half of the cost of keeping up a home for a qualified person. Again, I don't have time to cover it in this video, but you will read about it more in detail in your lesson plan, and I am going to quiz you on who is considered unmarried, what qualifies for the cost of keeping up a home, and who is a qualified person. So be sure to read about that, take notes, and then we'll talk about it next video. The last and final filing status is the qualifying widower with a dependent child filing status. This is another one of those lengthy ones that you do want to be careful when selecting because it does have a lot of rules for qualifying. Couple things I want to point out for your reading is you want to make sure you understand who qualifies as a child, and then what qualifies for the cost of keeping up a home. For example, welfare is not considered as paid by me because it is paid by the state. So you do want to go ahead and read those definitions to make sure you understand the qualification. So let's go over a quick example of how the qualifying widower status works. The year my spouse dies, I can either qualify for married filing joint or married filing separate. Remember how we covered that in the previous slides. The first year after my spouse dies, assuming I have not married and I have a qualifying child, then I can qualify for qualifying widower. The second year, the same thing. Now, in the third and subsequent years, assuming I have a qualifying person, I can qualify for married or for head of household, or I can always default to the single filing status. Alright, here are some quiz questions again. Please be sure to go over that before next video, and then we'll go over the answers. So to summarize, there are 5 filing status. In order of lowest to highest tax bracket, they are married filing joint, qualifying widower, head of household, single, and married filing separate. So to recap, your homework for this week is to read the Filing Basic lesson plan and the Filing Status lesson plan. So that concludes our lesson for this week. We've covered the previous lesson, the current lesson, and your homework for this week. If you have any questions, please be sure to enter them below. Otherwise, please rate and comment so we can get your feedback. And always be sure to join the conversation with us on YouTube, Facebook, or Twitter. Once again, my name is Tammy, your Max Tax Trainer. And if you are not already on our mailing list, please be sure to subscribe at maxtaxrefundguarantee.com/jobs. If there are no other questions, I'll see you in the next video.